Hey there, welcome aboard. It's Walter here, and I want to talk about a couple of different things to watch out for when you're trading your strategies. I talked to a trader today that I'm working with, and he was mentioning that he had several different strategies, and we had a good look at them, and they work in different types of markets, which is really important because a lot of traders think that by diversifying and trading different currency pairs or markets, you're diversifying. Really, it's the strategies that are most important. That's how you get the most bang for your buck when it comes to essentially diversification. So in that, I want to share with you a story. Oh, by the way, if you want to go to nakedtradingclass.com, you can get 3 ways to grow an account quickly. That video there will lay it all out for you and show you how those can work. I want to share with you a story. So this is a story about some traders that met online in an online forum, and they decided that they were going to trade this strategy. They back tested the crap out of it. Everything was looking really good, and they started going live, and they really ramped up their account. Things were going well, and each person had a different role. And what was interesting about this story is that in the end, it didn't work, and they shut it down because the account had suffered such great losses. And there's a lesson there because you see, they were trading the euro, and they were trading this back after the euro was kind of new. And when the euro, I started trading when the euro first started, was tradable basically. For a year before, you could use euros, but it was all interbank transactions. It wasn't actually a tradable currency. But then when the euro came online, that's when I started trading actually that year. And the euro went straight down. It went down like 78 cents or something like that in euro USD. And then it turned around a few years after that, 2003, I think, 2002, 2003, it started really ramping and going. And so these guys, when they traded their strategy, all of their data was from the early period of the euro, which was basically a straight bull market. And so when they started trading it, they set everything up based on their back-tested results. And that was great for a bull market. But what happened was the bull market kind of petered out, and that's where they got into trouble. And so that's something that it's really important when you do your back testing. You have to understand which type of market does my strategy work well in. Does it work well in range-bound markets where it's not really going anywhere? Does it work well in trending markets? Does it work well at the end of the trend? Does it work well in quiet markets where it's constricted and it's not really wide swings or wild swings? Or do you do better with wild swings? So it really is, it's going to depend on your strategy, and you need to understand what kind of market it works in. It doesn't mean that you need to get really crazy about filtering out trades. You can do that, but that's a tricky road to run down because you run into curve fitting basically if you do too much of that. I tend to use simpler strategies. If you can look at my other videos, we've got plenty of systems in there, but I think that they're more robust over time. Even though they might not work in, for example, trending markets, the more robust strategies have fewer moving parts, fewer rules, and that sort of thing. So I hope this helps. You can go to Naked Trading Class to get the class on how to do that. We've got another mastermind coming up. I'll talk more about that tomorrow, so you guys can get in on that if you want. It's a weekend of intense Forex learning, and it's all free, and you can get in that. We'll talk about it tomorrow. Okay, happy trading. We'll see you soon. Bye.